What's up, everyone? It's Scotty with Money Vesting. So Michael Burry is at it once again with the 13F filings being filed here over the last couple of weeks here. Basically, a lot of institutional investors, hedge fund managers, portfolio managers are required to disclose their holdings and their moves that they made in the second quarter 2023. Well, guess what? We do have once again the big short investor from, of course, the great financial crisis, betting against the stock market in the US once again with one of the massive short positions in the tune of $1.6 billion. So hope you guys are doing great. As always, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. You get access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included, as well as the intrinsic value spreadsheet, members only private videos. There's a lot of benefits included with the link down below. So we'd love to have you on board. So Michael Burry, the Big Short fame, reveals potential big bets against the market and tech stocks. And known for calling the subprime mortgage crisis, of course, he's very much against the market ever since, and he's been a very sort of like a bearish investor, right? He doesn't like to bet long, but instead take advantage of these very anomaly type events, once in a lifetime events where the market does crash over 30-40%. That's when he actually makes his real money, which obviously is not the best strategy because markets overall have been going higher. Burry's hedge fund, Skian Asset Management, own put options against 2 million shares of the S&P 500 SPY ETF, and these 20,000 put contracts with unknown value, strike price, or expiration were against shares value of over $886 million at the end of June. Talk about conviction. And he also held puts against 2 million shares of the QQQ ETF, and these 20,000 contracts were against shares worth $738 million at the end of the second quarter. So these right here were some of the companies and of course options that he actually owns. So you can see that some of the lower ones, Vital Energy, $6 million position, Stellantis, $6 million position, MGM Resorts, $7 million position, CVS, Cigna, Generac, Charter Communications, Expedia. These are all stock positions worth roughly around 6, 7, 8, 9, 10, 11 million dollars. But this right here is the real kicker. We've got the SPY put option and the QQQ put option combined worth over $1.6 billion. And put options, as we already know, when you buy put options, you're basically betting for the prices to go down, because if you buy a put option, and we don't know what the strike prices are, we don't even know if he still holds on to this, because the markets have already come down in the third quarter. Like since I would say July and August, the markets have been pulling back, right? So we don't know if he's still holding on to these positions, but they were new in the second quarter. And as we know that, your put strike is going to be below the actual market price if it's out of the money. And as the market price moves down to your put strike, it becomes closer and closer to being in the money. And of course, if it's below the put strike, it's already in the money. And that's when you actually end up making a lot of money on these put options. So these are a pretty hefty bet. And, again, tech stocks have been a little bit higher in terms of that valuation. We've talked about overbought conditions. We've talked about, the rally getting a little bit more and more stretched, the concentration risk related to just the big tech and the Magnificent Seven stocks kind of pushing higher. But overall, this is a massive short position. I mean, if you really just consider this portfolio, all these are very small. Like, these are peanuts compared to the value of these positions right here, because 20,000 contracts on both positions is a pretty sizable bet on a dollar notional value basis. That being said, I mean, if you come back over to the market and look at the S&P 500, if you go over to the monthly chart, in the month of August, we are down over 2%. In the month of July, the markets were still up over 3%, although the NASDAQ did underperform in the month of July. It was actually up a little bit over 4%. I misread. And then, of course, we are down over 3.89% in August at the moment as well. So we're starting to see a little bit of that pullback, a little bit of that consolidation for both the NASDAQ and the S&P 500. But, this can be seen both as a contradictory sort of indicator, or also if on an absolute basis, if you want to take into account how much he's shorting, the conviction level that he has, and of course combine the macros with them, then of course you'd be kind of influence to take a short position yourself. But again, Michael Burry has been wrong many times in the past. I mean, in fact, when he did say to basically sell, I think remember last year, or was it earlier this year, when he mentioned to basically sell, the markets have absolutely ripped from those levels and have gone up like 16, 20, 30% on a year-to-date basis. So, that being said, this is again a massive short position. Only time will tell how this ends up playing out, whether this is going to lead to some type of a short squeeze or some type of a pullback and a correction, and maybe some macro factors kind of coming into play with respect to higher interest rates and of course inflation numbers that do come out every single month, with energy prices going higher and the Federal Reserve's Jackson Hole meeting coming out later this month as well, which may have something to do with maybe seeing some additional pullbacks and sell-offs as well. So let me know in the comment section down below, what do you think about this and this Michael Burry's big short position of 1.6 billion. I'm not going to read too much into it. I know that he is, he does bet very much on the opposite direction of the markets a lot, but he's not always right. In fact, his success rate is quite low. So I'm not going to read too much into it. I'm still going to trust the process, follow the investing strategy that I have for the long term. Still going to be swing trading. We'll also be taking advantage of some calls and puts depending on the market conditions. But yeah, let me know in the comment section down below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Like I said, I wouldn't be surprised to see a pullback, a dip, or maybe even a correction for the markets in the short term. But I do expect the market situation to get better over the long term as inflation once again comes down under the Fed's target. It's going to take some time, but eventually I do expect it under 3%, under 2%, and of course the Federal Reserve to potentially start cutting rates in 2024. So as always, happy investing, and I'll see you all in the next video.